All right, good morning, everyone. You've got the bear report today. Brian seems to be dealing sort of a special report from the mayor and myself. We'll start out the show in typical fashion, checking in with Alex over there. How are things over in your neck of the woods?
Hey Thomas, I'm pretty good. How are you?
Pretty good. A little bit of surprise that I'll be doing the show by myself, but that's okay. We've got a lot to talk about and a lot of interesting macro stuff. You guys, okay, Tony's saying that I'm cutting off on YouTube. Can you hear me, Alex?
I can hear you, yeah. So I can't listen to YouTube and Hangout simultaneously, but I can just hook that up right now and maybe check in once
Okay.
in a while. So you're fine on Hangouts. So
All right, then I'll just keep on going here. All right, so first things first, let's check in with how the stock market's doing. We've got um, interestingly, the Dow is up and the S&P is up also. And I was kind of hoping I would have this commentary from Brian, but it looks like there is a budget and debt ceiling deal. So there's not going to be a federal shutdown or a default. And I think that this is actually way bigger of a deal than anyone realizes right now. And I'm going to get into some pretty deep stuff here, mainly from things like, sorry, I have to gobble down a fruit here. I drank some tea on an empty stomach, and otherwise I just get nauseous, and you probably hear some unpleasant noises in the background. But what we're looking for here is something that kind of caught people off guard here, and that is this deal that went through before we even got to the debt ceiling. And how this plays into the macro view is really, really fascinating. And I'll just jump into it right now. I would recommend before I get started that if you are interested in why the Federal Reserve is going to be cutting rates at the end of the month and what things the Federal Reserve looks at when it comes to making these decisions, there are two excellent interviews here. One of them is, and I would recommend you listen to this one first. This is All Stars episode number 32 here with Jeff Snyder. It's a quick, I think it's like a 25-minute interview, but it is thick. I mean, you're going to have to, I had to listen to it like 3 times. I was rewinding. There's a lot of information in it for someone like me who really, is a newbie to all this stuff. And it was fascinating. Like there's a lot of technical explanation here behind things like Fed funds, interest on excess reserves, how bank liquidity affects Federal Reserve liquidity, and how this is moving things like offshore Eurodollar markets and moreover influencing Federal Reserve decisions. So when you have the backbone to this, what you should do is move on and listen to this guy named Luke Gromen. He kind of talks about why the Fed is going to be cutting rates and all of the reasons for what could potentially happen, given what's going on between this difference between what's called the Fed funds rate, which you hear Brian and I talk about all the time, which is basically that 2.25 or 2 to 2.25%. And then this thing called this interest on excess reserves. And that is basically the excess amount of money that banks are supposed to be holding in order to get paid a rate of interest. So not only do you get paid as a bank to hold this thing called excess reserves, but also if you participate in the Fed funds market, you also get paid. Now, those two numbers, those two things are kind of separate entities. This Fed funds rate and the interest on excess reserves. You can see here, this is kind of graphed on this guy's charts here. This is from Jeff Snyder at Alhambra, and he talks about how this has constantly been tinkered with over the course of a couple of years. Now, what's really interesting is that the Fed has constantly been changing their interest on excess reserve rate, meaning that the banks that hold money in this excess reserve account, they get paid more or less depending on what the Fed funds rate is. So in this case, if you look at, for instance, this part on the graph, it looks like that interest on excess reserves is right about the same place as the effective funds rate. Okay, that's fine. Now, what gets really, really interesting is that in, it looks like January or end of December, um, the interest on excess reserves and this percentile thing moves. So things start to change a little bit. You can see even back in July, things like the interest on excess reserves are higher than the effective funds rate. That's denominated here by that dotted line. And this blue line is the effective funds rate. So the interest on excess reserve was higher than effective funds, meaning if the bank held money, instead of putting them into the Fed system, they were getting paid to do so. So what's even more fascinating about that is that the Fed looks at this and goes, okay, so right now there's way more money in this IOER account, and therefore people are getting rewarded to hold it in there. So the Fed goes, well, we want to switch that up. We kind of want the effective funds rate to be higher than the interest on effective reserves, because we want more people financing and putting money into the Fed, into the system that the Fed has. And in a long way around, it's sort of like a way of financing the US debt. Is an interesting way of looking at it, but there's a lot more that goes into it. And again, I recommend you listen to those podcasts to get a better idea of how that works. Now, the Fed doesn't want the banks to sort of hold all the money. So what they do is they incentivize the banks to move money from that excess reserve into the Fed funds rate. So they make that rate a little bit higher, or they try to lower the interest on excess reserves. It's, you know, a little fine tuning. So in this case here, in April, the effective funds rate was above the IOER ceiling. So in this specific case, there should be no reason why the banks would want to be holding their excess reserves, because they would get paid more to move that money into the effective funds rate. So really, there should be a lot of money to be made for the banks. The banks decide not to participate on this, and this is really weird. So we go even further now. We're into July, and now the effective funds rate is much higher than that IOER rate, but they're still not moving money. Now, this is where you sort of get this divergence between what this guy Jeff Snyder thinks and what Luke Gromen thinks. So Jeff Snyder thinks the reason why the banks aren't moving all of this money into the Fed funds rate here and getting rewarded for moving funds into the Fed here is because he thinks that the banks see more value in retaining dollars in their own system than giving them out. So that means, according to him, that there is a big problem in the system, and the banks see something that everyone else doesn't, and they're hoarding dollars, sort of anticipating this big event, whatever that may be. And it was, you know, it's pretty hard to speculate as to what that may be. Now, contrast that with what Luke Gromen thinks. He thinks that basically the banks don't actually have excess reserves, that there isn't actually enough money out there for the banks to move back into the Fed funds. Therefore, a shortage of liquidity, a shortage of dollars is happening, and the Fed has to do something about that, because then when there aren't enough dollars around, guess what happens to the dollar? It goes up. Now, there's an interesting case that Luke Gromen makes during his podcast, this was a week ago, is that essentially he thought that if a budget deal is reached that increases the debt ceiling, that suddenly the Fed will have more money in order to reliquidate the system. So therefore, what will eventually happen is you kind of get this short-term increase in dollars. The price of dollars jumps up, the price of risk assets falls, gold, silver, things like that. Even Bitcoin actually would start to fall as the dollar moved up. But this would actually be a short-term reaction to a debt ceiling deal. And interestingly enough, we're actually seeing this unfolding right now, where the dollar is actually taken off into that event. And really, you know, listening to all the news guys and all that stuff, they're really not talking about this. But you can see here, this is a 4-hour chart. The dollar's popping up here. I mean, this is like big news. Suddenly, the U.S. government's kind of gotten the green light to continue financing its own its own debt. And this continues to move higher. So what's going to happen is the dollar moving higher, you see gold's going to start to come off a bit. And as that goes forward, you're going to see things like the Fed using that extra money from the debt ceiling increase for things like quantitative easing. And that's probably what everyone should be looking for eventually when the Fed not only makes their announcement at the end of the month about cutting rates, but also about, hey, we're going to start things like quantitative easing programs, because now they've essentially been green lighted by this. And what that means is you funnel more and more dollars into the system, because I don't think the Fed or Donald Trump wants to see the dollar get out of control on the upside. And by using quantitative easing, I think you put a lid on the dollar, and therefore you also start to see risk assets start to rise again. So I think right now we're in an interesting environment where the dollar is going to rise. And I think for a guy like me, this is the perfect environment to start buy programs on things like gold and silver. But that's something that really has to be watched, because I don't think anyone anticipated this happening so quickly. So this is really, really key stuff, what's happening right now. And going into that Fed meeting, you have to watch things like their commentary on interest on excess reserves. Now, the reason why the Fed's going to be cutting is because of all of this, because of the fact that potentially banks may not have that interest on excess reserve account. They may not have the ability to sort of reliquidate the system and take money out, because really interest rates are too high for them to borrow and what they see in this environment. So by the Fed cutting a quarter point, they're essentially giving the green light for not only the banks, but also the private sectors to continue financing what's going on behind the scenes, which is we've switched away from the sort of global idea that everyone around the world is going to finance the US debt, whereas now you don't really see anyone participating in the purchasing of US treasuries anymore. And interestingly, I think the US government's supposed to issue another like $11 trillion in debt here. Who's going to buy that stuff? I mean, really, the foreigners have stopped doing it. So by lowering rates here and giving more liquidity into the system, you've essentially green lighted everyone in the US to continue financing the US's own debt. And this is really, really interesting, because now you have things like Powell coming out. He was in Paris last week, and he basically said that he sees things like US monetary policy that has changed in 2008 as sort of the new norm, that we're not really going to go back to quote unquote normal, that this idea that easing and policy that we've used before is going to be the tools that we continue to use going forward. See, there's got this quote here for accommodative stance on policy. I mean, the writing's on the wall here. I really think that the Fed really sees that there's a big issue here, that if we don't finance the debt somehow, the US is going into a sovereign debt crisis. So, I mean, all this was like, I've been listening to these two podcasts and trying to read all I can ever since I listened to this thing last night. And I think I was playing this in the kitchen while we were eating dinner last night. And I think my wife was pretty pissed off that I listened to the same 20-minute podcast for like an hour. But I mean, to me, this is fascinating stuff, because really, and I don't think a lot of other people understand this. And that's what Luke Roman goes on. He compares what's going on with what I just explained, sort of as the quote unquote Voldemort in Harry Potter, that he was referred to as he who should not be named, because no one really thought he existed, that this quote unquote sovereign debt crisis, or this financing of US debt, is actually an issue. And most people don't see it. And even moreover, by surveys, he mentioned surveys by Merrill Lynch and Goldman Sachs and several other banks, that most investors aren't positioned for an accommodative Fed. They're sitting in cash, they're holding bonds, they're kind of, they're afraid to get in here. And we all know what happens when everyone's sitting on one side of the boat. So I think there's a lot to take away from this. And even more so, I think this is something that is very early on in the world's understanding of how this all works. And moreover, I think it's a fantastic opportunity to try to get the narrative right, to understand how this should all play out in a way that we can all capitalize from it. Because in a system like this, I mean, really, not only should risk assets do well, but I think equity should do well too going forward as you start to see a more accommodative Fed with things like quantitative easing or whatever program they may decide to launch. But it's certainly interesting times, right? I mean, I've never really seen anything like this before, but I'm also new to this market. And really, I don't think you're hearing this stuff from the mainstream media, and it's fascinating. So I'm sorry I kind of went a little long there. But I don't know if Brian popped in here. I think I heard somebody. Yeah, there he is. So should we welcome you into
Hi,
the program
everybody.
here?
I totally fell asleep at my desk. I'm so exhausted right now. My apologies, everyone. That was interesting perspective. Thomas, if anything, thank goodness you're here today. I'm just going to let you keep talking. You just keep heading on, keep going. But I guess what I see is Euro's falling out of bed. U.S. dollars perking up. I still think that's a lot of stuff that we really shouldn't get too convinced that direction's been put in the market ahead of this Fed announcement event. But I suppose when we get together in this coming week, we'll probably have all this behind us. So I suppose the one thing that jumped out at me when I was looking at the markets this morning was how egregious the move in the euro was. Was there any news? Like, did the ECB meet or something like that?
No. So the Fed or the U.S. government debt ceiling deal was made. They increased the debt ceiling.
Oh yeah, I mean, a big surprise. If they, I've been through this before. If they didn't, and actually, it's a bit interesting there, right? Because in years gone by, usually the stock market would break ahead of that event, and the politicians would be scrambling, and in years I remember one time basically the Republicans held the market at like gunpoint and said, no, we're not going to raise the debt ceiling, too fucking bad. You remember that guy the guy from the senator from Kentucky, what the hell's his name? He's always audit the Fed. Anyway, it was his day to shine, and they didn't, and the stock market just collapsed. Like literally, Ron Paul, thanks, Kevin. Literally, the market broke like 1,000 points, which back then was a lot. And everybody was freaking out. And so then all the politicians came running back and, okay, fine, we'll raise the goddamn debt ceiling. So if anything, I'm a little bit surprised, actually, that wasn't used as a weapon this go-round. So,
I think the people behind the scenes realize there are some big problems here.
Well, no doubt about it. It's not like you can't raise the debt ceiling. I mean, it has to be done. There's no choice. So the question really is why was it so conveniently and so quickly put through? If I'm not mistaken, I think Congress is going to go on its session break soon. And everybody was worried that this debt ceiling issue would happen while Congress was on recess. So I think that's why it was sort of pushed through here so quickly right now. Yeah, I mean that's par for the course. But why would the U.S. dollar be rallying in the face of that? That doesn't make any sense. Hey, we all got new credit cards. We're going to go spend money. We're going to go blow up. We're going to devalue our currency. So your currency rallies. What?
Yeah, I mean, it's an interesting knee-jerk reaction, right? This is kind of a temporary reaction. I don't think it's the trend. I think it's kind of that out of the gate, okay, things are okay in the U.S., therefore the dollar rallies, which also affords the Fed the ability for stimulus programs. They've got more money to do it. They've got, that stronger dollar, so they can push it down now. I mean, it's like the perfect storm set up for the Fed to do what they want to do now.
Yeah, I don't think that really has anything to do with the Fed, though. That's the debt ceiling has everything to do with Congress.
So the money that's allocated goes where? Like, if they can borrow more money, where does that come from?
Well, it's supposed to be, and this is the problem with our society, is that the Fed really shouldn't be even part of this sort of economic stimulus equation. It's just the damn politicians; they don't do anything. And I remember years and years and years, we always like, well, Barack Obama can't do anything because Congress is Republican, he's Democrat, so they're just gridlocked and they don't do anything. And now with basically the executive being run by Republicans and the Senate controlled by Republicans, again, we're back into this sort of the politicians don't do anything. All they do is they just kick the can, kick the can, kick the can. So ironically enough, I don't think the Fed doesn't even want to be part of this. They're not. They're supposed to be like reactionary towards inflation. So we live in a screwy world. The Fed is not supposed to be doing the business here.
Well, the Fed's supposed to make sure they have one job to do, right?
Well, their one job is supposed to be to try and control, keep control of sort of the purchasing power of the currency.
Exactly.
That hasn't gone very well.
Through which instrument?
Well, primarily through short-term interest rate policies.
Exactly.
So
if
but that doesn't really have anything to do with debt ceiling. That's, that's kind of apples and oranges.
Right. But what's interesting is you're saying the Fed really shouldn't be doing anything here. But the problem is that they are trying to do something, and it's they have to be reactionary because of this. I mean, maybe you missed the beginning, and I definitely think you should listen to these.
Yeah,
podcasts.
I apologize. Like I said, I fell asleep. Totally unprofessional of me, and
okay.
I just woke up and I was like, "Aren't I supposed to be somewhere?" Oh, fuck me. So I'm only hearing half of your case, and really, you don't need to necessarily go back into it. My apologies.
No, not at all. I'd just love if you listen to it and we could, kind of discuss it in person, even because
maybe what I'll do is I'll listen back to your presentation later on.
Don't even listen to me. Listen to the actual podcasts that I was referencing. I'll send you links to them later. I think you'll enjoy them.
Sure.
All right.
Yeah.
So I don't know. Did you catch my story yesterday about me getting assigned the tip?
No, you got signed on your. Did you buy puts or calls?
Yeah. So I had tips that expired in the money on Friday, and I never got filled to close them out.
Uh-oh.
So when I woke up Monday morning, I was assigned a whole bunch of stock short.
Oh boy.
Well, it was fun.
Yeah,
right?
it's dangerous. I mean, hopefully you have deep enough pockets you can, handle that. But yeah, that's one of the vulgarities of playing derivatives, and especially like Hogue used to freak out if we ever were in a futures contract that was the front month. So how did that go? Did you lose a kidney?
I almost did. When I woke up, when I tried to cover the position, it was showing that I would be negative higher balance that I went short. But really, if I was assigned short, I should have gotten the premium for going short. So I didn't understand what was going on. So I had to call my broker, the first time I ever did. And no, you have the cash in your account for it. But it's not letting you use that cash to close out the position because it takes 2 days for this silly rule to go into effect for me to actually use that cash after getting assigned the position. So they had to close it out manually. And I'm on the phone with the trader, and he's like, okay, well, the bid is 115.28 and the ask is 115.29. Where do you want to put your bid? So I'm on the phone trying to get a fill for this thing to close it out manually because I didn't want to hold a short in that account. And we put the bid at 115.28, and he waited a minute, and he's like, well, no fill, and the market's creeping up on you. All right, move it up a penny. So we're looking, 30 seconds go by. He goes, you've been filled 4 contracts, 16 contracts. And I was like, okay, well, we're like, that's nothing. I need the whole position closed out, right? He goes, all right, give it I goes, you have the order book in front of you? He goes, yeah, I said, all right, tell me how many contracts are at 115.30. He goes, you got 500 contracts on ARCA and 1,500 contracts on this exchange. And I was like, okay, well, should we move it up? He goes, hang on, you're getting filled. I'm like, all right, all right, all right. He's like, you got 1,000 contracts, you got 1,500, you got 2,000. Everything's filled up. And like that, I was out of the position. So I was pretty happy about that. But that was the first time I ever called up, and I told the trader on the phone, I'm like, hey, this is actually the first time I've ever made a phone order. He goes, that's so funny because there are people that use us and they don't even use the software. They prefer to call in to do all their ordering.
Sure.
So that way, there's my story. Anticlimactic, but I escaped and really didn't even take any haircut on the position, luckily. But be careful, right? Use me as a lesson that if you are holding options that are expiring in the money, you will be assigned the stock. So I was lucky in the tip.
You took the level 3 course, right?
Oh yeah, I mean, here's the thing. I was on a plane on Friday and set my orders on Thursday. I thought I was going to get filled, but it never happened. So it is what happens. But remember,
Well,
I didn't get burned
learned
because the
the
position.
lesson. I mean, Julian had to learn that lesson about being assigned on options as well. He had a spread trade going that exercising the money. I just, for whatever it's worth, I don't like that kind of anxiety. Brian who wants to try and keep his hair on his head. So I just try on balance just to make a general rule, and I think it's a really good idea that when you're heading into expire, even like a week or so before expiry, at the very least, just roll the position out to a later contract. But nonetheless, it is what it is. So good to hear that you made it through in one piece. That's good.
Well, I was just lucky that the tip didn't move against me as I was holding the short, right? This is how people blow up their whole accounts is they get assigned the stock. And if I was short and the stock went up to 180, if the tip went to 118, I'd owe a bit of money to my broker.
Yeah, definitely. All right. So lots of journal entering for Thomas. I'm hearing. Learn something new every day.
It was fun. I actually enjoyed the process.
That's cool. And if anything, also too, I mean, I don't know whether you use a discount broker or what, but that's also a really good analogy of sometimes it's in your best interest to pay a little bit more and have a broker that you can work with and that you can call and talk to on the phone and stuff. And at least they don't go and just market blast your position out on you because you're under margin and you're toast.
Yeah.
So do you work with a discount house?
I don't know if they're a discount house, but what they said is that they usually close out positions like that for people who get assigned that, and I purposely don't have a margin account for reasons like this. And he's like, yeah, usually you'd be closed out at market open, but he goes, I think what happened was the margin desk looked at your position and they saw that you were still making money on it. And it was the tip, which doesn't really move much. He's like, you were probably the very bottom of the priority list to be closed out.
Yeah, because usually, and actually I think the level 3ers just did this. Usually what ends up happening is if your option is in the money, the clearing corporation by definition has to legally exercise the position. I think it's like by a nickel or something like that. And so your broker probably just got a notice that the clearing corporation did it, and like you said, you were on a list of to-dos for the brokerage house, but you got in contact with them before they got to your name on the list.
Yeah, exactly.
Yeah. And I think the bottom line here, everybody, I mean, Thomas is a superhero. Great. He's able to, handle a situation. I think, honestly, everybody, it's not worth the headache. I really think you just make a general rule as you're approaching expiry. Don't be in these things. Just roll the position out and then you don't take that chance.
Yeah, I agree with that completely. It was quite the fun thing to wake up to.
Well, and that's the one thing I like about working with you is you're very calm. I don't think I've ever heard like the tone of your voice change. Brian, of course, oh my God, look at that, oh man, this motherfucker. Thomas is just like, okay, it's just another day at the office, no big deal. So you're very you're actually really, really good at handling stressful situations.
Well, there's always a solution to every problem.
Okay. I think I'll have your phone number on speed dial. Okay, if you don't mind.
I'm surprised you don't already.
Okay, so Alex says here that we're at the bottom half of the hour, so we might as well talk a little crypto here. With regard to the alts, I don't see a hell of a lot going on, but I did notice that in the lounge overnight and stuff, people were posting lots of coins, altcoins were putting in W's and stuff. So, maybe in this kind of environment with Bitcoin calming down a little bit, in a trading range, maybe we have the basis for a little bit of an altcoin season. I'll just say my two little alts that I put on recently, they're not really doing a heck of a lot. You can see I bought the BTT at 11 and it's sitting at 9, and I bought good old Doge at 32, 33 and sitting at 29. So not a heck of a lot going on with either of these guys, and you can see the internals on this BTT are looking questionable. If we break these lows, I'll just walk away from this. But what are you seeing in the market in good old crypto? Any news or anything that has come across the wire that caught your attention?
I'm glad you asked. I can go on for about 15 minutes with some of these news articles. You want me to run through this stuff? You want me to run through the news
Have you already
articles?
talked crypto?
No.
Oh, okay. Yeah, I'll put myself on mute. Do your thing and teach us a little bit about what the hell's going on.
All right, let's see what's going on today. So got a couple articles. Actually, there's a lot going on today, but start out with some humor, if you can appreciate this. Facebook and Instagram now have a problem with scammy Libra ads. I think that this is karma in the purest form here. Remember, Facebook and Instagram kind of banned cryptocurrency ads before they launched Libra. And that seems that there are a bunch of scam websites that are running ads on Facebook and Instagram to try to get people to sign up for their fake Libra accounts and steal whatever money they send or personal information. And they're even replicating the website well. And I think this is still live. There's this LibraCoins.com site that really no one actually knew this existed until I think it was the Washington Post made a comment that, hey, there's actually some fake Libra ads here, and they alert. Yeah, here it is. So the Washington Post reported on them on Facebook, all these fake ads. I mean, scammers are going to scam, but I found this kind of humorous that people are trying to impersonate Libra. Anyway, next piece here is a little bit of insight as to the population and demographic. Well, really just the population that seems to be adopting cryptocurrency. Despite the bear market, Coinbase added 8 million new users this year. So they're showing that, this is kind of like a sigmoidal curve, it looks like, but the sharp increase that happened in 17 into 18 really isn't at the same velocity of new users as it was. The price was rising, but there are still more and more users coming into the marketplace. And even more fascinating was this article about how many people are trading of Bitcoin as per TradingView statistics. So according to TradingView, there are 2.5 million active Bitcoin traders. And they said that when it first launched in 2017, more than 5 million monthly users used their product to get real-time charts and data for prices. The figure peaked at around 5 million during the crypto market peak in 2018. And right now, the current active trader count is at 2.5 million people, which I think is staggering, right? You can see this chart that this guy tweeted out here. They do a nice job graphing this thing. Correlates pretty interestingly with when this price peaked into, well, here we go. So the active users came down into 2018. Yeah, so this makes sense, right? Peak of Bitcoin at the beginning of 2018, and we start down. And hey, this thing started bottoming into the beginning of the year in 2019. And we didn't really see price bottom just yet. So this might be an interesting thing to keep watch on. But I think this is just a slide. Now counts 2.5. They're extremely engaged. And yeah, so they're saying these users check in more than 7 times a day on average. So 2.5 million active traders that are charts more than 7 times a day. I mean, that's pretty crazy. So lots of active traders, active community. This thing's not dead, is I guess the point of his articles here. Next is Iran is now looking to legalize Bitcoin and cryptocurrency mining. According to this research by Elite Fixtures, it costs about $3,200 to mine Bitcoin in Iran using Antminer S9, Antminer S7, and Avalon 6. That's because there's been a rising number of mining farms. It caused a 7% increase in energy consumption that affected Iran's power grid, leading to problems and power outages. So as a result, the government's looking to actually recognize the crypto mining as an industry and regulate it in a way to actually incentivize mining from giving benefits to people who are mining in terms of kickbacks and electricity and tax kickbacks. And I think that's sort of in the face of a global landscape where Iran is increasingly being cut out of the global economic, I guess the system is really what they're being cut out of. So Iran sees this as a way for their economy to sort of participate in their own way without having to be constrained by US governments. That's why this is a little concerning, because the more that Iran starts adopting cryptocurrency and the more we find out that they're transacting around the world with other nations that they shouldn't be conducting business with, the more the US government's going to get pissed off about cryptocurrency. But I think it's kind of handicapped and handcuffed here in the way that they have to recognize this and they have to allow this, cryptocurrency, Bitcoin, and mining to proceed. Because it really is the easiest way for them to continue participating from an economic standpoint. So that was an interesting article. Next thing here is Ethereum is going to be implementing their EIP 2025 in the next hard fork. And I actually have to emphasize maybe implementing, not that they will be for sure. It seems, I don't actually understand exactly what's going to be going in this update, other than the most obvious, which is that they're proposing a 0.0055 increase block of Ethereum that's supposed to go toward Ethereum developers to help finance their project over the last 18 months. So how many Ethereum is that over the course of 18 months? According to this guy, that's 136,400 Ethereum. So at current prices, what do we at? Call it $200 times 136,400 is roughly $27,280,000, which is like, really, guys? What do you need $27 million here for? And I think understandably people are a little upset about this. And moreover, this is a little bit of inflation for this whole space. And I'm not sure that's welcomed in sort of the current landscape that we're at, where crypto seems to be coming off a bit. So I think this is, this is new to me. So I don't know if this is going to go through either. Even the developers seem a little upset about it with these new block rewards. So it's definitely something to keep your eyes on. But hey, Ethereum is coming off here. Maybe this has something to do with it. Maybe it doesn't. But certainly something to keep an eye on from a fundamental perspective. We already did that. Okay, so this is kind of entertaining, right? Everyone remembers that Justin Sun was the one who bid for this charity, Warren Buffett. Well, it turns out he had to postpone the launch because, according to him, he had health problems, which include kidney stones. But really, it seems, this guy's in his late 20s. Like, I don't know how you get kidney stones in your late 20s. Unless you have like one of them unhealthy diets here, but nonetheless, he can't travel to this luncheon. But what's really going on behind the scenes is there's a lot of sources coming out and saying that he has been sort of, the finger's been pointed at him for money laundering, for financing pornography, and other kinds of terrible things that evidently China has put an ban on his passport. Is down today because of this news. So Justin Sun is ill with kidney stones and or I don't know if it was child porn, but definitely pornography. And then in the face of all that, OKX is like, well, we're going to skip the lunch too, and instead we're going to donate $4.5 million to our own insurance fund instead of to paying this Warren Buffett lunch. And the community was like, yay, that's great, because I don't think lunch is ever happening with Justin Sun sort of handcuffed here. So that's pretty much the rundown of the news. I had an article about India and their proposed ban on Bitcoin. You know, it's very, very important to stress that this is a proposed bill that some professionals think that isn't going to go through. But, you know, nonetheless, this is still something that government's going to have to address there eventually. So where are we at? Here's that fear and greed from yesterday. It seems like we're coming down a little bit today, but that's your roundup of the news. I don't think there's anything else kind of happening here. But I mean, as far as technicals are concerned, remember yesterday we had that Ethereum short on that I was playing, and really we haven't done much the last 24 hours since that short, except we kind of bounced a bit, and I actually ended up I moved my stop pretty far down. I ended up getting pulled out of the position on this candle yesterday. So where we're here, and then this bounce up to this level here actually punched me out of the position, and therefore I've had to trade this on lower time frames. But I think this thing still has room. And if you didn't get stopped out, great. I know you're following your own trading plans. My plan is now more shorter term, so I'm going to try and get in on something like another test of this neckline, which kind of happened into the overnight hours. And if we can't get that push down into the 200 level, I still think that Ethereum has a little bit more down to go. Just from the way that I'm seeing the market. And I did see a lot of people posting in the lounge that they've done pretty well on their own positions. So it's nice to see that they're finally catching on, that Ethereum seems to be more trader friendly than, say, trading Bitcoin on margin. That was cool to see. And, it's really funny how similar these 2 4-hour charts are. You've got that head and shoulders breakdown. Bitcoin seems to be closer to that 61.8 level. But you can see side by side, when I switch between these two contracts, very similar in terms. These things are behaving very, very close together. I'm actually eyeing more of a short-term bounce potentially here on the hourly on Ethereum, mainly because we've got this potential bullish divergence, which isn't yet. We still need some structure, but we'll see how that plays out. And maybe we can get kind of a counter trend rally to get me back short on the position. But if not, it breaks down, so be it. Maybe some other people will make money, which would be great. Same thing on Bitcoin. I think the hourly looks similar as far as that potential bull div. So this is here too. Again, not confirmed. Got to wait for this to break above the zero line with structure, and then I can start to get interested in going long. But for now, we're kind of in no man's land, right? We're at 50%. We're not quite at Mountain Man. To me, this just seems very, very much like we've got to kind of punch to the downside and kind of enter into levels of interest. Liquidity may exist, which is down here in this sub 10,000 range, 98, 96, even maybe sub 95. But those are the levels that I'm watching going into the rest of the trading day here. I'm not trading anything else other than those two. I'm still hands off most of these Schultz, and I still have positions on things like ZRX and what's it called, Lumen, where not doing too hot, but I'm still interested in adding to those as they come down, because I still think that once we get that pop, these are going to perform quite nicely. But still a little early for that, and that's okay. I'm not betting the farm on these names, and frankly, it's just kind of fun to mess around with them. So you can see here ZRX and XLM, nothing here yet. You've got that bull div here on this daily chart, but no market structure to speak of. And we've really made new lows. So this is kind of a dangerous area, even for me to be adding to positions. But I'll take my shots and see what happens. Maybe we can get a nice W and kind of continue to add with more confidence. But definitely dangerous areas for these levels here. So that's what I'm looking
A
at.
lot of the crypto kids were kind of hinging their fortunes on that luncheon, and Warren Buffett coming out and saying, "Oh, crypto's not so bad after all." So it's probably a bit of a warning sign. Yeah, if anything, I think it's probably this is a really good time for everybody to really, really sharpen up on setups. And you can take your shots, but I just don't feel it in the atmosphere that we're in a rip roaring bull. So just go slowly, everybody. I did see Kevin, I think, was posting a chart on ETC. Let's for fun. We got about 5 or 6 more minutes left here. ETC. Kevin, was that in US dollars or was that against Bitcoin versus Bitcoin? All right. We can just go check it over on. Yeah, look at that cute little W. So, I mean, there are opportunities out there. A little disappointing that these rallies are coming on very, very low buying interest. You know, I think we talk lots with you guys about weekly W's, and I was really this was one of the only ones that had a weekly W. And I got a funny feeling that this was your bull market, and then bam, right, got blasted out. So go slowly here, guys. And, you know, if you are going to trade this W and we do roll over and fail, you know, like what's the risk you're going to take? 0.006, like the breakout here. And, I don't know if you took the trade or not, Kevin, but, you know, I guess what I'm seeing is down, up, down, breakout. So there it is there. Some people like to have 2-day confirmation. Probably not a bad idea if you did take this. Watch this trend line really closely. If we start closing below it, that could be trouble. And probably, you know, just even in the short term, you know, that's probably the ranges that we work with. Interesting how 38.2 lines up with this original attempted rally peak. So, you know, I can see the trade. The problem here, like I said, is that is there any sort of oomph behind this market? And I just don't feel it right now. But 2.4 risk reward, yeah, you know, it's there. It'll be interesting to see how that plays out. And we were watching that Tron, so probably not a bad idea to take a look at that again. I don't know where the best place to look at this. We'll just look at it versus USD here over on TradingView. You know, like the daily chart, that's, you know, very head and shoulders-y. We said that this was a V bottom. And we had somebody on the site who was interested in maybe hunting longs here. You know, probably a really good lesson for everybody. What are we supposed to think if we ever see the market smiling at us? That's not a good sign. If anything, you know what, this kind of looks like a nice little trading range here. So I can understand if we do get bullish setups to maybe be hunting sort of down in this window here, reload zones. Notice this big old tail. So, you know, it's interesting that, you know, following that announcement that Justin is sick, I don't know. And I did notice a lot of people were like, I don't know. Really? What a coincidence. But, you know, I won't comment on that. But, you know, if we look at the internals, I'm thinking about buying, okay, you know, this is, if anything, where we really need to get into sort of the 3 steps. So, okay, we've got location. We came down to the bottom of value. All right. We look down at our indicators, you know, whether you like watching Willie. Is Willie stupidly oversold? No. Or whether you like watching things like, things like RSI. I should probably change the color here. There's our RSI. So do we have any sort of, Julian style trend line breaks here on RSI to think that the trend has changed? Not really. Do we have anything on MACD to indicate divergence? No. And of course, volume impetus. Clearly we can see, the bulls were awake here. Actually, this is a really good analogy of volume impetus. But notice, right at this point, the bulls just disappeared. So a little disappointing there. Structure and the indicator start rolling over, suggesting warning signs. We could make the argument MACD actually went into bearish divergence here. And then as Julian's sort of been trying to show you guys recently, pretty convincing momentum break right there. So put it all together, lots of sort of negative warning signs right in here. And then, like I said just a moment ago, what are you supposed to think if you see the market smiling at you? So awfully tough. This kind of like Thomas's idea there just a moment ago. Maybe a bit early for us to be calling bottoms here. Interesting trade location. This guy is holding his recent lows. I don't know whether that XLM that you were looking at, were you pricing that in Bitcoins or were you pricing that in dollars? Or ZRX, I guess, same sort of thing. That's in dollars.
Yeah.
Oh boy, if you zoom out on that thing to a weekly chart, do I see a big fat M on your ZRX there? So be careful here, people. This still looks really dangerous. You're over there on Coinbase? I don't know where to look at this. Here's this. We'll do another one for Binance here. Okay, so off the 4 hours, that's the same sort of thing as Justin's coin. But internals, there's just nothing here to get excited about here. So be careful, everybody. Please be careful. Yeah, and I noticed this kind of bothersome. Number one, first and foremost, we broke to new lows. That's never a good sign. But you can see this massive smiley face. So again, be careful. This is not where I think we need to become superheroes and bet the farm on any of this stuff. Go slowly. Okay, so Mr. Bear, any sort of closing comments for these good people?
I think you covered it.
Okay, go slowly. We don't need to push. If anything, we still have the Fed announcement coming up here. The luncheon that I believe was going to be a big catalyst has now been put on pause. And actually, that's the first I heard of it. You're hearing that Mr. Sun actually is under a little bit of pressure here by governments. So that's never a good thing. So, that is the top of the hour. My apologies, everybody. In 5 years doing this is the first time I've ever missed a daily brief. So it just goes to show how completely stressed out I am right at the moment. So my apologies again. Nice to see Riza in the call here, being quite active. Riza, do you have a microphone? Maybe you can come on just in closing here and tell these good people about what your plans are with this little course that you're offering. You making any progress on this? I thought it. There he is. And we hear Riza. Come in, Riza.
Yeah, so essentially I've went ahead and
hey, there he is.
all 7 weeks. And
good morning,
just
sir.
as a bonus. Good morning, my friend. Thanks for having me. But yeah, just long story short, I went ahead and I uploaded all 7 weeks. And on top, I added a bonus week for MetaTrader integration for Binance. So if anyone's looking to do Binance trading with MetaTrader, that's also now included with the course.
Oh, awesome. So are you still feeling positive that we'll be moving forward on this course?
Yep, I was editing the website backend before the daily brief started, and I've just been now editing week 1 and 2, just finishing the voiceovers from April. So we have week 3 to 7 already done, and I have a bonus week 8, I guess.
Excellent
module that you guys can take if you're interested.
Excellent. All right. Well, I know a lot of people on the site have been asking me about this, so we're super stoked to offer that. So actually, everybody just got to hear Riz's voice for the first time. Yay! He's actually not a robot. Imagine that.
Well,
Way
thanks
to go,
again, man.
sir. Way to go. Oh, there he is. What else? What else is on your mind? You want to say? Anyway, we're past the top of the hour. Glad to hear that you're making progress. We'd love to have this as a nice complimentary course on the site. So let's just keep on keeping on. And of course, we're less than a week away from TRI Meetup Vancouver 2019. Reza, of course, is going to show everybody a good time when they're in town here, right, Reza? Arr, arr, arr. But anyway, we got a whole crew here of everybody getting excited to meet you all. So I'm blabbing here. Thank you very much, Thomas, for covering me while I was asleep. Sorry, everyone. Oh my God, terrible, terrible, terrible. But bear with me. The old man is trying his best here. So thank you very much, Thomas. Mr. Mayor, what do you think? Shall we call it a day here?
Yes, sir.
All right. Have yourselves a great day, everybody. All the best, and bye for now.